Good evening, everybody, and thanks for joining us today for this webinar hosted by Trica and Recur Club. And we've been thinking about hosting this webinar for quite a while, and all of us being a group of entrepreneurs and angel investors and venture capitalists, and we have seen quite a lot how founders and investors do spend quite a lot of time in setting up and finalizing an investment deal, but and there are also so many resources available online on how exactly is it that founders can raise funds, but rarely is it discussed on what founders should do after raising these funds, and how exactly is it that they can build strong relations with investors. So this session is something that we have hosted that is focused just on this particular thing about how we can actually discuss what are the do's and don'ts in investor relations and reporting, and how exactly is it that founders can leverage tools to improve monitoring and reporting. And just to sort of let all of you guys know that who joined us in our session out here today is that we wanted to keep this more of an interactive session, and all of you can of course use the Q&A or the chat window to keep posting your questions. And what we'll try to do is that we'll include those as part of the flow, and ensure that they are covered up instead of taking them all up right at the end. On that note, let me begin by talking about the panelists that we have for you here today, and just to ensure that we can have a much more wholesome discussion. We have speakers from multiple sides of the table, and so we've got investors, we've got founders, as well as we've got entrepreneurs. And our first speaker here today, Siddharth Sharma, comes here with more than a decade of cross industry experience across SaaS, BFSI, and technology industries, and he is currently head of Trica Equity. So he's going to begin by talking a bit about Trica Equity, and how exactly is it that it can help founders in managing their cap table as well as improving their investor relations. Over to you, Siddharth.
Thank you so much, Harshil, and wish everyone a very warm welcome for joining the session today. Today, we are going to cover how to improve investor relations and reporting. And the way we have structured our session today is in three parts. We'll start by introducing you quickly to Trica Equity, an Esop and cap table management solution from Let's Venture. It will be followed by a panel discussion on the topic of investor reporting, and we have brought you several different perspectives, one from a fund, another from a bootstrapped company, one more from a recently funded company, and I will bring the perspective of a platform which is trying to digitize the experience of equity management for startups. And it will be followed by a quick demo of Trica Equity, and then Eklavya will take over to tell you a little bit more about Recur. So let me start by sharing my screen. Give me 1 second. Harshil, can you confirm if you can see my screen?
Yes, I can see your screen. Yes.
All right, great. So first of all, so I am Siddharth and I head the business at Trica Equity. And Trica Equity, like I mentioned, is a CRM-like SaaS solution that helps companies to manage their ESOPs and cap table through an intuitive and easy to use interface. Currently, we work with close to 650 odd companies across India, US, and Singapore, out of which 25% would be fairly evolved Series B plus companies and close to 12 unicorns. And as you can see, these are some of our customers. And through Trica Equity, more than 15,000 stakeholders, employees, as well as shareholders are being managed. While we are solving for a lot of pain points for startups, we wanted to talk about a few which might immediately resonate with the founding community today. So first of all, we understand that ESOP management is a highly complex process. It involves a lot of back and forth between employees and employers and the issuance of physical letters. So we have done away with that completely by integrating with an e-signature platform that helps us to go completely paperless through these e-signatures. The platform also acts as a single source of truth for all the stakeholders, whether these are internal stakeholders or external stakeholders. By internal stakeholders, we mean founders, HR heads, finance heads, and employees. And by external stakeholders, we mean investors and exited employees. So even when an employee exits from the organization, they continue to have access to the platform because they may have a few ESOPs issued by the company that they can exercise over a period of time. And the third pain point that we have seen is ESOP liquidity. We understand that when a startup raises capital, it is primarily for growth. So we are solving for the secondary objective that most founders have today of creating wealth for their employees. So we can help in customizing and planning periodic liquidity events through our network of close to 800 odd investors who are on the platform. And we also facilitate secondary transactions for founders and early stage investors who are looking for a part exit or a complete exit. So the other thing, the reason why more than 650 companies trust us today is, we are highly secure. We are ISO 27001 certified, and we go through periodic, VAPT testing, vulnerability and penetration testing, which is certified by third parties. Our platform supports all kinds of compliances across India, US, and Singapore, and we help companies to generate industry standard reports and also certain reports which can be customized as per the requirements of our customers. And finally, the pricing is very well aligned with the startup ecosystem. We have a fairly large pricing, free tier rather, up to 100 users. We only charge a nominal onboarding fee of 5,000 rupees, which is a one-time payment, but we are waiving it off for the participants of today's webinar. So you can, feel free to reach out to us on contact@trica.co, or you can use the promo code which is mentioned on the screen to book a demo with us. Back to you, Harshil.
Yes, great. So, I mean, like, this is great. I mean, I'd really urge all founders to really reach out to Siddharth and his team. I mean, for the wonderful product that they've created. And, moving on, I think as next part, next in the webinar, what we'd like to do, of course, is have a more panel discussion around this, about investor relations and reporting. And, next, we, as part of this panel, we've got Archi Bagchi from Thoucentric, which is a niche management consulting company. And, we were hoping we could learn more from him. So before we begin, Archi, let me try and make you the host, if that can allow you to start, your video.
Sure, let me try.
Oh, yes, that's wonderful. I think there might be a problem. So yes.
I do see myself. Yeah. I don't know if everybody else is able to see me.
Yes, we can see you. Okay, that's great. So I think, the first question that I have for the, Archi, is that, if you can talk a bit about Thoucentric's journey and, how exactly is it that, you started this organization, and, who are the, the current investors and backers that you have?
Sure. Thanks, Harshil. And a warm welcome to everybody on the call. So Thoucentric being a consulting firm and being in the services space, the model is a little more traditional for profit. And we had to be kind of bootstrapped and profitable given the nature of the business that we were in. So from a journey perspective, it was initially a collection of individuals who were trying to kind of sell their own services, including myself and our founding team, whatever expertise we brought to the table, and then we kind of tried to structure ourselves and grow the team and reach out to more and more customers who could trust a small company with work that is generally given to much larger outfits. So obviously there was after the first I would say 6 to 9 months, there had to be a stage when we wanted to be kind of an employee-owned company at the early stages. So we all invested our own funds, our own money, our own time, and sweat to some extent, and we became owners. But again, in 2 to 3 years' time, there came a stage when we really saw that our working capital needs in our profit journey was also becoming a bit of a stretch. And we also wanted to invest for growth, right? And that stage we reached out primarily to friend, family connects that we had from our corporate experience over the last 15, 20 years that we have been working. So we have mainly HNI or some standard corporate houses, not the traditional investors or investment funds. Um, they have invested in us, and again, because it was from very trustworthy sources from our professional careers, giving them enough visibility of what was happening in the business was very important. So I think going back to the theme where maintaining investor relationships through reporting and the kind of data or information that investors want to be aware of, that became very important because there were obviously, as I said, there are a set of people who are employees who know what's happening in the organization. They as owners or we as owners, we were very, very well aware, like day-to-day challenges, what is in our control, what is not in our control. But as soon as we had somebody from outside having stake in the company, the way they perceive or the way they want to view the company is very different. It's like looking at a house by living in it and by being outside of it, but having a stake in the house, so to say, right? So yeah, I think we have raised such type of high net worth individual funding at two different stages so far. Yeah, and we've realized that it is extremely important to make sure we have regular connect with our stakeholders, giving them information in the way they want to read it. Obviously, there's some information we believe is important and therefore has to be there in our reach out to our existing investors. And but there are also certain kind of information that the individual investors might specifically ask for, and having a mechanism in your day-to-day operation so that that information can roll up naturally and be visible in some platform, I think is key. So yeah, that's our journey. We kind of grew organically first, and then last 2 to 3 years we have taken some additional investment in the cap table. We also use debt as a source of fund at times, again being a slightly different or slightly more traditional forms than what you hear about in the market today. Given our EBITDA levels and profit levels, we do get some leverage with the standard traditional financial institutions, mainly the banks, who give us either an overdraft or an invoice discounting kind of a feature to help raise some debt as well for our funds.
Okay,
So
that's
that's
great.
kind of a bit of a intro, Harshil. Yeah, I'll maybe give back
So
to you.
that's great. So, like, I mean, as you were talking about, there have been, a couple of times where you also, used, closed group of HNIs to raise funds. Like, so how exactly are you, maintaining relationships with them? And then, what sort of reporting, if you could sort of delve a bit deeper into that. I mean, you
Sure.
touched upon that.
Sure. So we have a meeting with our investors. We call it kind of an investor slash shareholder meeting where whoever owns equity in the company directly come, and then we share primarily our revenue performance and our profit performance. Because the purpose, again, it has to tie to the purpose why an investor came and joined us. They joined us because they believed if they give us money for growth, we will grow. And the way our business is valued is through our profits and EBITDA. So a clear visibility to our revenue journey and our profit journey, and our projections in for the next 3 to 4 quarters, how we see the business uh, from a revenue and EBITDA perspective. These two become very important for a business like ours because we have to remain profitable. And then there was a funding that came specifically for developing assets and working on products where we use our profits to create and uh, I would say take some products and platforms and accelerators to the market. uh, that once that came up, we had to constantly show plans of, okay, how much are we spending on that? Can we support that through our operational cash flows? Are we hope we're not overspending on that? And then how many customers are we getting? How many POCs are we doing? Because that part of the business, the platform part of the business, obviously had to be an upfront invested business where we wouldn't get returns in the first 3 4 years, and that 3 4 years is what we are living now. So yeah, so clear-cut reporting on the services side. The numbers that are important is revenue and EBITDA. On the product side, okay, are we getting revenues? EBITDA is not as much important. And we have this forum every 2 months for our shareholders to meet and kind of be on the same page, express concerns. We try to address those concerns, and hopefully there won't be too many going forward. But yeah, so we do have a forum where we exchange information and feedback on that information from our investors.
That's great. On that note, I think I'd like to move on to Richa, the next panelist. Archie, if you could also make her the host, I think she should be able to share her video.
Sure.
Okay.
I still can't, but
no, I think just a sec. It'll be just right.
Sure.
Yes.
We'll have to pass on the baton. So yeah, I just made you the host, Richa, I think.
Thank you, Archie. Okay.
So,
yes, now I can. Hi guys.
Just to introduce Richa Bajpai, she's from Campus Fund, and that is Asia's first and very own dorm room fund. And I'm really dying to hear quite a lot more about that. So Richa, if you could just begin by first talking about what is the vision behind Campus Fund and what made you start such a fund? Yes.
Sure. So, Harshil, what made me start Campus Fund is very simple. I've been a student entrepreneur through and through. I did my first startup when I was in my final year of engineering about 12 years back, right? So, that's the motivation basically because, I've lived the life of being a student entrepreneur. And basically the whole objective of Dorm Room Fund, as it is said, it's basically to support student entrepreneurs in the country, right? So we are a fund, a proper venture capital fund, which invests in student-led startups, right? So that's what we do. We want to sort of, create that ecosystem that more and more students become job creators and innovators rather than job seeker. And more successful startups, should come out of campuses because our thesis is that the future of India Inc. will be built on campuses, right? So that's the, vision that, we are chasing, and that's what we do as Campus Fund.
Oh, that's great. Yes. So, so on that note, of course, right, I mean, most of these entrepreneurs that, you would be working with, of course, them being so much, right in college, and I'm assuming they would be undergrad students, right? And so
undergrad, postgrad, all kinds. Yes.
Sure. So for many of them, this would be the first time they would be interacting with institutions, right?
Yes.
So
yes.
Like, what is there, like, how do you feel like, being on the other side, an investor, like these entrepreneurs, how exactly is it that they're, managing relations with you and, reporting their metrics to you? And, how has that experience been?
Sure. So, obviously, it's actually a very interesting experience, right? Because as you rightly mentioned, these are students, young entrepreneurs interacting with an institutional investor for the very first time. So basically, we have to handhold them. Obviously, they know the metrics that matter to their business because they are ultimately building a startup. So it's just that, we bring in some help and guide them in terms of the kind of things that they should be looking at, apart from what they're already tracking, and bring in some cadences, so that we interact with them, say on a monthly basis or on a fortnightly basis based on the stage of the company that they are, right? Whether they are trying to build an MVP, launch products in the market, or whether they are trying to raise their next round of funding after we've invested in them, right? So it's basically co-creation is what I say, we do with them. So we help them, move from, so to say, a project or something that they're doing out of their dorm room to sort of, help them to convert them into, real life businesses, right? So, they are doing everything. We are just enablers. And the relationship that we keep with our startup founders is very friendly, right? There's no hierarchy, there's nothing. It's basically, they have the flexibility to reach out to us at 2 in the night, 3 in the night, and, discuss anything and everything because, we want to be that non-judgmental sounding board for them, right? So at these stages, our investor relationship and reporting with our startup founders is very peer like, it's like a bro kind of a conversation. I'm your friend, and you just that, I'm supporting, or we've invested in your business. Help us understand what your metrics are looking like, what are the things that you should be achieving, right? So we sort of operate as if we are part of their extended team, right? So that's the kind of relationship and camaraderie that we need to build with our student entrepreneurs. And that's how investor reporting and relationship works when we work with student entrepreneurs.
That's wonderful. That's wonderful.
Yeah.
Yes. So I think we also do have a question, and I think, Richa, you might be really, you might be the best person to talk about this. I think we have a question from Anurag that's talking about, how open are existing investors to a founder wanting to raise debt or alternative financing in the future?
Right. I think, everybody is, see, this ecosystem is also seeing a lot of change, right? The venture capital ecosystem, right? It's becoming, it's like a tipping point for this industry in the country, wherein different methods of financing are coming in, alternative financing, be it debt, be it whatever, right? So interesting structures are coming in. So it all depends on, the appetite, or, what the investors' vision for their fund. And, they are being more and more accommodative to what entrepreneurs want. And if the business is doing great, if it makes sense for the business, to look at alternatives, kind of alternative financing, I don't think any investor would have an objection to it till the time it's beneficial for the growth of the company.
Wonderful. Yes.
Yes.
So I think next, I'll move on to
Yes.
Siddharth. If you could also pass the baton on, yes, to him.
Yes, I'll do that to Siddharth. I've made him the host. Over to you.
Awesome. Thank you, Richa.
Sure. So Siddharth, in your experience working in this space, what are the different types of reporting that, investors generally do expect from founders?
Right. So while there are several different kind of exchanges that happen between a startup and investors, in our experience broadly, there are three kinds of data sets which are reported by startups to their investors with some sort of cadence. So the first one is obviously KPIs, key performance indicators of a company, and they actually vary by the industry in which a startup may be operating in. For example, for a SaaS company, the KPIs that are reported to investors could be ARR, which is annual recurring revenue, number of acquisitions in a month or a quarter. It could also be LTV, which is lifetime value of a customer, or average contract value. However, for a company which may be operating in an e-commerce space, the metrics could be completely different. For example, GMV, average order value, or cart abandonment rate. So it really depends on the the industry in which a company is operating, basis which they will report their KPIs. The second set of data that companies typically are reporting to their investors is their financial health. For example, their expenses, their marketing spend, their customer acquisition cost, again, depending primarily on the industry they are operating in. And very often, the KPI and financial health data is clubbed into a single reporting, which is done, either on a monthly basis or a period or a quarterly basis. Generally, it is done on a monthly basis in most cases. The other set of reporting, which is done by investors either on a periodic basis or asynchronously, is an update around maybe a commentary around the past quarter, the highlights or lowlights of the past quarter, or any period they are reporting the data for. For example, if a company undertook a global expansion, how was the experience there? How was the overall performance as was committed to the investors earlier? Or any other challenges that a company is facing or may have overcome recently. So these are some of the data points which are reported by companies to their investors on a periodic or asynchronous basis.
Oh, okay, that's great. Yes. And so like of course as you've already mentioned the different types of reporting, but I mean this is again still a problem. So why do you think that so many founders actually struggle in maintaining such reports and achieving this level of transparency with their investors?
I think simply put, it is because of lack of a platform which helps startups or the founders to consolidate data and report seamlessly to their investors. So right now, in our experience, what founders do is they consolidate data from various different databases. They may be maintaining these KPIs, expenses, or any other data they would want to report to their investors in several different sheets. So they will consolidate this, then prepare a report and send it over to their investors. And then they keep a track of the dispatch and delivery of, and by dispatch I mean e-dispatch and not a physical dispatch, obviously. So dispatch and delivery of these reports to their investors. It continues to be a challenge because there is lack of feedback also from the investors. A company would just know that they have sent an email, and they have no clue whether the investors have received it, they have well received it or not. What we have done at Trica is that we have been aware of this problem for a while, and we decided to solve for it. And we recently launched an investor reporting solution which is integrated with our cap table management platform, using which companies can easily consolidate data from their Google Sheets in which they may be maintaining these KPIs, add them to the templates that we have created, add a commentary around their performance during the past quarter or any other reporting period, and send it over to their investors, who can either access these reports by logging into Trica Equity, or by simply clicking on the link which is secured by their email, or finally just accessing the reports through their emails if they want to. So we are aware that this is a big problem for the founding community today, the startup community today, and we have already solved for it.
That's great. So Siddharth, I think before we move on to that, I think I can also have Eklavya talk a bit. I mean, if you could also make him the host.
Yeah, I have done that. Eklavya, you are the host now.
So hi. So Eklavya is the founder and co-CEO of Recur Club, which is a trading platform for companies with recurring revenues, to help founders raise fast, flexible, and hassle-free growth capital without dilution. And Recur Club recently raised its seed funding round. So Eklavya, I thought if you could talk a bit about what sort of reporting is required with your investors and with your backers.
Thanks, Harshil. Thanks, everyone. So I think, I think very, very well touched upon points by everyone, and Siddharth especially, on key things to monitor. Maybe I'll take a minute to probably share my screen if I can. Once. Okay, there's a no problem. So basically, I think what Siddharth was mentioning, I think, so one thing should be very clear, that it is not just about investor reporting, right? As founders, as senior management, as employees, you're all investors in the company, right? So it is about tracking and improving. So it's very important for you to, measure what you are doing in and out, right? Obviously, reporting is an outcome which can be used by internal employees, senior management, or external third-party investors, right? So I think very, very important distinction that one should keep in mind, because there's a habit of people to say that, oh, I'm reporting to investors, I should only report good things, right? I've seen a lot of companies do that, right? We should not make that mistake, because investors are there to help us, right? Like, they've seen various cycles of the company, they've seen the ups and downs. So we should leverage their network, leverage their experience. So well-defined KPIs, right? Siddharth was mentioning. I think very, very, very important, and that is something we are doing actively at Recur as well, right? Define operational metrics of whatever suitable for your company. Define financial metrics, define your key targets where you want to achieve and how would you want to achieve. So the more you break down from day zero, right, it will help you to strategize, to plan accordingly, and thirdly, to effectively monitor and report the deviations. And then you will clearly know, what you failed, why you failed. Like at Recur, we follow something called OKR, right? Like a lot of organizations start follow that. Again, very important, right? To keep you on board. So it's not just about reporting to investors. It is also about what I'm trying to say high level. It's about good corporate governance and keeping things on track, right? So that you can perform well. And I think we followed that and it helped us a lot. Because when you speak to investors and if you have data ready, it gives you a confidence and it gives the investors the confidence, both existing and new potential investors. And these guys know what they're talking about, these are the top of the business, etc. And you can have meaningful conversations, because at times you may only find an hour a month from very marquee investors, right? It's practical. They not give you, like an hour every day. So you need to be very clear of the key ask that you have from the investors, right? And for that, you need to have it reported back. So I think what Siddharth was saying, right? Use tools effectively. And we obviously at Recur Club, right? Like we are a trading platform which facilitates non-dilutive financing. But additionally, what we also do is, for our portfolio companies, we have something called data-driven insights, which we provide to those companies, to track their operational financial metrics, and that can be used for internal as well as external tracking. So I think that really helps. That shortens the time as well, for your potential discussions with investors. I think that is something that everyone should keep in mind. And one key thing, right, in investor reporting is don't just let it be only data, right? Contextualize the data for investors, tell them that this was good, this was bad, because they may have 50 portfolio companies, right? And the charts showing hockey stick everywhere. So you may not be able to achieve what you ideally want to achieve from this investors. So highlight your misses very well, highlight your hits very well. They should know that your company is performing well, right? But more than that, have key asks from the investors in your investor reporting. I think that's very, very important. So you can leverage the network strength. I think these are a few things if you keep in mind. It's very straightforward, and the tools what trica is building in and what we have built at Recur for our company during Insights. We encourage companies to use that, for their investor reporting. That really, saves time for the founders, management team, the financial teams. Yeah.
That's great. So, Eklavya, since Recur Club, also facilitates investments in various different companies. So, what sort of reporting is it that you expect from them?
I think it's a very good question. Obviously, we being equity investors traditionally have required a lot of reporting, right? So we don't require. We are an alternative financing platform. We integrate through APIs with companies invoicing and financial softwares through which we directly pull data. And in fact, we have the full visibility, that we want. So we, for our business, don't require any investor reporting, unlike equity investors, who would typically expect a lot of things. But we still we give back to the companies, right? Like and report kind of form in terms of insights, which they can leverage if they have to share with their equity investors. But it's not a requirement at Recur Club, to share investor reports, etc., because we are already integrated with your data and we have what we need, right? So we try and make sense, help ourselves, help our investors on the platform, which are institutional investors, simultaneously, help the companies by giving back, and use it for their primarily equity investors report.
That's great. Yes. So next, I think we have Vaibhav out here who's going to be talking about the trica equity platform and how exactly is that trica can improve investor reporting. Vaibhav, over to you.
Thanks, Harshil. As everybody is discussing how important it is, I'd like to share my screen and show you how trica helps companies structure their cap tables as well as helps them in investor reporting, right? I hope my screen is available. So once you sign into the trica equity dashboard, there are two versions of it. If you want to issue out ESOPs, we provide you with that. If you want to manage all of your stakeholders, your shareholders, there's a separate button that you can switch to the cap table side. You can manage all of your shareholders in shareholder wise view, how many shareholders have what amount of equity, how much equity you have diluted in which particular round. If you want to check your cap tables based on investor wise and round wise, who all have invested, what is the shareholding pattern for these investments that they have made, what is the share certificate that was given out at the time of investments, right? So all of these things are available on the dashboard itself. It can also show you historical data based on the investments that you have got in your company. Let's say you have raised multiple rounds of funding, and now you want to check what was my cap table before Series A. The tool helps you to see a fully diluted cap table as well, and download the cap tables based on a particular round or on a particular date. Let's say you want to figure out what was the cap table like on 1st of April 2021, that can easily be fetched from the platform. The interesting feature, the investor reporting, we have recently built out this feature based on the feedbacks that we were getting from different startups. You can create multiple reports. Let me create a report for you. Once you click new report, we have certain templates that we have already panned out. If you want to start with a blank report, that is also possible. If we click on Y Combinator, we can select, let's say if we want to show an annual report on the revenues that we have generated. You can add certain KPIs that you want to show on this report. You can see how the revenue has changed over the last year, how much cash do you have in your bank, and all of these things. Like we mentioned during the call that how the investors can help you. You can add what all things the investors can bring up so that it drives the startup even more. You can also add a summary here. If you want to add multiple charts, let's say you want to have revenue and the cash and banks both in a single chart, you can add charts from here. You can add quotes, you can add lists. Let me add a chart. You can connect your Google Sheets. If you are managing these KPIs on different sheets, you can connect these sheets. Let me select and the KPIs that I use. Revenue versus expense. You can add these columns and metrics. What was your revenue like in lakhs? You can also add, let's say, the cash in bank. And you can choose whether you want a column or a line chart to depict this. Once you save this chart, we will be able to show you this chart here itself, how the revenue has changed over the past with respect to the cash and bank that is available right now. So you can add these documents as well. If there is a supporting document that will be related to this report, you can add these documents directly from here. Once you have made your final report, let's say you have added all the KPIs, the different charts that you wanted to show, how and why you want this help from the investors, the summary of the report. Once you have added all of that, you can select whom you want to send these reports to. I'll click on the add recipient and send button. We can have pre-configured lists or groups of people. If you can select multiple people and add them to a group. Let's say Ashok and Sarit, I want to send them today, and I can add them in a report. Key investors. Right? And once you send them, it asks you that do you want to enable the link sharing? Do you want to add a security so that the email the link is only opened by the person that you are sending it to? And the thing that we mentioned is you are not able to track who has opened this reports or not, or if your investors are opening this report or not. We have enabled that feature as well, wherein you can see who has viewed your report. Is it that what time that they viewed your report? You can see all of that from this function. Adding to that, we can also help you with various securities that you can store on the platform, the different shareholders that you have currently. You can keep a total of all of that, and all the shareholders that you add on the platform get their own dashboards to look into, right? So they can see that what is the investments that they have made in your company, what is the revenue that they are getting, or what is the rate of return that they are getting from the investments that they have made. The different funding rounds that you have raised, you can add these funding rounds on the platform itself. You can generate multiple reports, whether there is a transaction reports of all the transactions that have happened in the past, how many shares have been allotted, transferred, converted. In the past, all of these reports can be generated. If you need an MGT9 report all for a particular year, these things can be downloaded. There's one more interesting feature for all the startups that are raising funds, right? You want to also check that what will be the impact of this fundraise on your current cap table. If you want to share this data also with your current investors, you can add multiple scenarios. Let's say there is an investor one who is joining you with a certain amount of money, and you're adding something to your existing ESOP pool as well. If you have created an ESOP pool and you want to add certain amount to that ESOP pool, you can also show them. And you can download this and show your investors that what will be the impact of the current fundraise that you're going through. From 47%, Sarit Verma's investment has gone down to 42.68. So all these things are available on the platform for you to see. As I already mentioned, we help you with the entire management of the ESOP part as well. So if you have issued out ESOPs in your company, you can manage the entire issuance right from the issuance to the exercise from the platform. If you have any questions, we can go on a detailed demo. I think the links are shared by Divyansh. You can book a demo for seeing the entire portal once again.
Sure, Vaibhav, I think there is one question that, from Rohan, that can an investor request for a set of metrics that they want from the investor portal?
Can you please repeat the question?
I think there was a question from Rohan that can an investor request for a set of metrics that they want from the investor portal?
So I can answer that, Harshil. So Rohan, the KPIs that would be needed by an investor would be communicated to the founding team, and then the founding team would be able to add those metrics in your either the template that you would create or the template that is already available on the platform. And the investors would also be able to access the reporting that is just been done when they log into their respective trica profiles. If you mean that the request or the format should also be sent by the investor to the startup, that is not yet built. No.
Sure.
Can I have a question? This is Archi, Harshil and Vaibhav and Siddharth.
Yeah, Archie, please.
So, yeah. So we are existing subscribers to your cap table utility.
Yes.
So does this kind of come free to us, or will you charge us?
No, absolutely free. I'm sure. So I'm sure you would have already started seeing, a new tab under the cap table solution. So you can start leveraging the solution, Archie, right away.
Okay, thank you.
Sure, Archie, I think we have yes. Sorry.
Now, I think the numbers do have to be entered by us manually, though, right? I mean, it'll give us the template that will look investor friendly, but there has to be a way to update the numbers consistently. Coming back to this portal, we can have a finance person come and just update it and go.
Yeah, so
Is
it
that
will act.
how the?
Yeah, it will act as a central repository for the company as well as the investors. So it essentially acts as a single source of truth. And if you are managing your KPI data in a Google Sheet, then it will seamlessly fetch the information from the Google Sheet into the reporting template. And obviously, the idea is to make this experience a lot more seamless. The other day, we were discussing that eventually we would be able to pull out this information directly from the ERPs.
Perfect. Great.
So Archie, I think we have a question for you too.
Okay.
So, I mean, like, since mostly that, you are bootstrapped and that, there are a few HNI investors that, you are working with, do you think that at some point in time, raising venture capital actually becomes a hindrance, for
No,
considering the
no,
business
no.
that you're in?
No, please don't think that way. That is not the way at all. See, there is certain thing you will need. There is certain thing you might not need in your business. And as the founder or the entrepreneur, you will be the best judge of what kind of capital infusion you are okay with, given the business that you're in. So when you are doing a venture, a risky venture, it'll only be VCs who will come and help you, right? Given the nature of the risk that you take. Obviously, equity by itself is a very expensive capital. I mean, as an entrepreneur, you're building something, giving away a part of it always hurts, right? But a VC comes with a lot of market intelligence, not just money. So if you are young, if you are trying to do something very, very different in the market that the market has not proven yet as a business model, uh, you should look forward to validations through investment from a VC and take their market intelligence from, because they are probably investing in multiple such companies like yours. So it is not a hindrance. Don't look at it that way. But yes, you should be careful as an entrepreneur to not mix the nature of funds that you actually need to what you're easily getting in the market or what is right out there available for you. Equity is expensive as a capital to let go. So yeah, be cautious of diluting your own control on the company. And if debt can fund something, fund it through debt. But venture is not easily funded by debt because debt will need some assured returns to be able to fulfill the ROI expected from debt. So be cautious, make the right fund, chase the right funding. Uh, you know, don't fund your working capital through equity, right, or venture.
Yes.
Fund a risky exercise through venture. That's
Sure.
all I can say.
I think, on that point, when you were talking about, how expensive, equity capital actually is, I'm sure, Eklavya might have a few lines to talk about that.
No, sure. Actually, I'm glad actually you say that because not a lot of founders, get it. You're obviously you've been in the business for long, but I think what you have precisely said, just extending that, equity should be used. We always tell founders that either when you're pre-revenue or when you have to spend it on an uncertain activity like a R&D activity or a new geographic expansion, right? But when you have to fund a predictable expense, like that if you spend 5 rupees on marketing, for example, right, your business generates 50 rupees. Using equity for that is, not proper capital stack management, right? And hence the previous option that was there, debt. Obviously, I didn't speak about Recur Club in detail. I think what we have also brought in is kind of another option for investors other than equity and traditional debt, which comes and values your recurring revenue cash flows, right? So I think that's what we at Recur Club have introduced as a third option, uh, which basically values the customer cash flows, the revenues that are going to come, and pays your value upfront for it today. It's simply like your customers paid you today, right? But I think what you were saying is precisely right. Activities which have a payback period of, say, more than 12 months, or you don't know what's going to be the outcome, equity is best in those cases. Or if it's a predictable expense, your working capital, your growth expenditure, your customer acquisition cost funding, marketing cost funding, um, you know, debt is still comes with a lot of obligations, governance, guarantees, etc. And hence we believe, that the club is a perfect solution, especially for asset light regulated companies. So totally agree on what you said there.
Okay, that's great. So I don't think there are, any other questions. I think Siddharth, on the note, should we thanks a lot everybody for joining in. Hope you learned a bit more about how you can really maintain your relations with your investors. and that can really help you in your journey to move forward and to unicorn and beyond.
Thanks, everyone. Thank
Yeah.
you.
Thanks, everyone. Bye-bye.
Thank you.
Thanks. Bye.
Have a great
Thank
day.
you.
Bye.
Bye.